Hey everyone, it's host name with the Wealth Wave. Let's talk about building long-term wealth, specifically for you guys, the 30-something hard-working Europeans out there. Now, you're at a prime age where you've got some solid earning years ahead, but you've also got to be smart about where you put your money. We're not talking about get-rich-quick schemes. Those are for the birds. We're diving into building a responsible, diversified portfolio that can weather any storm and set you up for a comfortable future. Think about it. You work way too hard to be throwing your hard-earned euros away on risky bets. You want your money working just as hard for you, growing steadily and safely. That's what this video is all about. We're going to break down the key asset classes you need to know, how much of your portfolio should be dedicated to each, and why it matters. By the end of this video, you'll have a crystal clear understanding of what a rock-solid investment strategy looks like for your specific situation. So, grab a pen and paper, get comfy, and let's dive right in. First up, let's talk about the elephant in the room, or should I say the Bitcoin in the portfolio. Cryptocurrency, particularly Bitcoin, has been making headlines for its wild price swings and potential for huge returns. Now, I know some of you might be thinking, Graham, is this stuff legit? And it's a fair question. Bitcoin is incredibly volatile. It's like the roller coaster of the investment world, thrilling for some, nausea-inducing for others. Here's the deal. Bitcoin can be a high-risk, high-reward play. If you're looking to potentially 10 times your money overnight, well, that's not impossible in the crypto world, but, and this is a big but, you could also lose a significant chunk of your investment just as quickly. Remember, this isn't like investing in established companies. Bitcoin's value is purely speculative, driven by supply and demand, and influenced by news cycles and regulatory changes. So, should a 30-year-old European investor like yourself dabble in Bitcoin? If you're comfortable with the risk and understand that any investment in crypto should be considered fun money you're willing to lose, then maybe a small percentage, like 1 to 2% of your portfolio, could be allocated to Bitcoin. But remember, this is not financial advice, and it's crucial to do your own research and understand the risks involved before investing a single euro. Let's move on to something a little less volatile, shall we? Gold. This shiny metal has been a store of value for centuries, and for a good reason. Unlike fiat currencies, which can be printed endlessly, gold is finite. There's only so much of it in the world, which gives it intrinsic value. But here's the thing about gold. It's not about getting rich quick, it's about preservation. Think of gold as your insurance policy against economic uncertainty. When inflation rises and the purchasing power of your euros dwindles, gold tends to hold its value or even appreciate. It's a hedge against the craziness of the markets, a safe haven asset that can provide stability to your portfolio during turbulent times. For a 30-year-old European investor, allocating around 5 to 10% of your portfolio to gold can be a smart move. It's not going to be the star performer during bull markets, but when things take a turn, you'll be glad you had that golden safety net in place. Plus, let's be honest, there's just something satisfying about owning a little piece of history, right? Now let's talk about building long-term wealth, and that's where shares come in. When you invest in shares, you're essentially buying a small piece of ownership in a company. As that company grows and becomes more profitable, the value of your shares increases, and you get to participate in that growth. It's like owning a tiny slice of the global economy, and over the long run, the stock market has consistently trended upwards, even with its occasional dips and crashes. But here's the key diversification. Don't put all your eggs in one basket, or in this case, one stock. Instead, spread your investments across different sectors, industries, and even geographies. A well-diversified stock portfolio might include companies in technology, healthcare, consumer goods, and more. This way, if one sector is underperforming, your other investments can help cushion the blow. For a 30-year-old European investor with a long time horizon, a significant portion of your portfolio, perhaps around 60 to 70%, should be allocated to shares. Remember, time is your greatest asset when it comes to investing in the stock market. The longer you stay invested, the more time your money has to compound and grow. Now, you might be thinking, Graham, cash in this economy? But hold on, cash isn't just about stuffing bills under your mattress, it's about having liquidity, having financial firepower when you need it most. Imagine a once-in-a-lifetime investment opportunity comes knocking. Or maybe you need to cover unexpected expenses. Having a cash reserve ensures you can seize those opportunities or weather those storms without derailing your long-term financial goals. Think of cash as your peace of mind fund. It's not about beating the market, it's about having readily accessible funds to cover emergencies, take advantage of opportunities, or simply sleep soundly at night knowing you're financially prepared for whatever life throws your way. For a 30-year-old European investor, keeping around 3 to 6 months' worth of living expenses in a high-yield savings account is a good rule of thumb. This provides a buffer against unexpected events and ensures you're not forced to liquidate your investments at inopportune times. Let's talk about something tangible. Real estate. They don't make more land, as they say, and investing in property has always been a popular way to build wealth. Now, I know what you're thinking. Real estate in Europe can be expensive. And you're right, it can be, but that doesn't mean it's out of reach. First off, you've got options. You don't necessarily need to buy a multi-million euro villa outright. Real estate investment trusts, REITs, allow you to invest in a diversified portfolio of properties with a much smaller investment. You could also consider investing in rental properties, generating passive income while your asset appreciates in value. Real estate can be a great hedge against inflation, as property values tend to rise along with the cost of living. Plus, there's something incredibly satisfying about owning a piece of the earth, a tangible asset you can see and touch. For a 30-year-old European investor, allocating around 10 to 20% of your portfolio to real estate can be a solid strategy. Whether you choose direct ownership, REITs, or other real estate investment vehicles, this asset class can provide diversification and long-term growth potential. Finally, let's talk about diversifying your currency risk. As a European, a significant portion of your wealth is likely denominated in euros. But what happens if the euro weakens against other major currencies? That's where diversifying into other currencies can be beneficial. Investing in assets denominated in currencies like the US dollar, Swiss franc, or Japanese yen can act as a hedge against fluctuations in the euro. If the euro weakens, your investments in stronger currencies can help offset those losses. Plus, it exposes you to different markets and economies, further diversifying your portfolio. Now, you don't need to go overboard and start exchanging all your euros, but allocating a small portion, maybe 5 to 10%, to assets denominated in other stable currencies can be a prudent move for a well-rounded portfolio. So there you have it, a blueprint for building a rock-solid portfolio as a 30-year-old European investor. Remember, the key is finding the right balance for your risk tolerance, time horizon, and financial goals. This isn't about timing the market or chasing the latest investment fads. It's about making smart, informed decisions, staying disciplined, and letting the power of compound growth work its magic over time. The sooner you start, the more time your money has to grow, and the closer you'll be to achieving your financial goals. If you found this video helpful, give it a thumbs up, subscribe to the channel for more wealth building tips, and don't forget to share it with a friend who might find it valuable. Until next time, remember, your financial future is in your hands.